For those of you especially who participated in the Identifying Trends webinar, they know very well that markets do not move in straight lines, yes? Whether the market is ranging, uptrend or downtrend, it doesn't move in a straight line. It moves in a series of zigzags, a series of tops and bottoms, such as these, yes? Market moves upwards, creates a top, retraces back, makes a bottom, and then continues upwards again. So we have this series of zigzags as the characteristics of how the markets move. Now, in the case of a strong uptrend, for example, such as this, after the market moves up and creates a top, what are we looking for as trend following traders? Now remember, the trend is upwards. It has been identified as an upward trend, and it is getting ready to go for a corrective wave. Ideally, what we are looking for is to find a level, a possible level, where this correction will end before the market continues moving upwards again in the direction of the trend. Now there's several different techniques of using to estimate at which level a correction can stop before continuing in the direction of the trend. One of those techniques is what we call percentage retracements. We have a time frame which is the last 75 to 100 candles. This is our time frame, anything to the right of the red line. Yes? So what is the all-time high of our time frame now? It's this level here, which is the highest price in our last 75 candles. So in order to use the Fibonacci retracements to find support and resistance levels, we take the Fibonacci, in the case of a downtrend, from the all-time high and drag it all the way down to the all-time low, and mark the 23.6, 38.2, 50 and 61.8 as possible resistance levels that could cause an end to the correction and then a continuation in the direction of the trend. So this is another thing that we can add to this analysis of support and resistances. Again, because we use Fibonacci, it doesn't mean that we ignore previous tops and bottoms. So any previous top or bottom are still significant to us as support and resistance levels. What's the other thing that is significant to us? The 55 moving average and the 20 moving average. So you see here, for example, we have the 38.2 Fibonacci retracement coinciding with the 55 moving average. What does that mean? That means that this level now becomes bolder. This level becomes more significant. The more things that we have that agree with the same level, the more significant and the stronger that support or resistance level becomes. So when we're looking for support and resistances, previous tops, previous bottoms, in the direction of the trend, so in the case of a downtrend, from the all-time high to the all-time low. And we outline our 75 candles. In order to use the Fibonacci in an uptrend, we take it from the all-time low of our time frame all the way to the all-time high. And the 23.6, the 38.2, and the 50%, the 61.8 are the possible support levels.